You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
People don't realize we are on the verge of a commodity boom. I think we're just in the beginning stages of it.
I'm Bill Powers. It's Mining Stock Education, joined today on the show for the monthly check-in with my friend Nick Santiago from MiningStockEducation.com. Nick, welcome on to the show. Let's jump right into it. What was your best commodities trade over the past 30 days?
Well, it's wheat. I traded wheat recently, a few weeks back, and I nailed the bottom basically. And I did it with the ETF, WEAT is a symbol, but it's really, I'm looking at the wheat futures chart when I do that. And, in 2 weeks, we made 16% on the second half. Total gain was over 11%. I know some people don't think that's a good gain, but, again.
We've already educated them in a recent show, though, I remember.
But that's a very good gain. So that's been my best swing trade as of late. So, that's a pretty good one. And I'm going to repeat that one because wheat has pulled back quite a bit from about the peak of a week and a half ago. So I'm gonna get back into that wheat shortly. If you could get the WEAT anywhere around $6, I think that's a really good trade. Right now it's probably around $6.40. So if you can own that around $6, you could trade that up well into the low eights.
Nick, when I talk to just some friends in my social networks, I've mentioned UNG as a good trade based on your advice to me as well as others. You still think that's a good trade?
Oh, absolutely. Absolutely. I trade UNG, but really I do it because of my members, right? So I want to be in the same product that they're in. A lot of them don't have futures charts, or else I'd be in just nat gas futures, which I think have bottomed out already. It's making higher lows. These are big time frame patterns, like a monthly chart pattern. So it's starting to work its way up and go up the right side on the chart. But it just takes a little bit of time. Everybody wants instant gratification. I mean, I've been in and out of nat gas several times throughout this year and last year and made money just about every time. So this one's been a little bit of a grind because you got a lot of geopolitical events going on right now. And, when there's geopolitical events going on, there's a lot of funny business out there. Manipulation of certain commodities. It's always been the case. It always will be. But, natural gas generally bottoms out in the first quarter every year. And I think it did that this year. And, now it's just starting to work its way higher. But I love nat gas right now, and it's one of my favorite plays.
Nick, I know you look at the charts, not the fundamentals, but the fundamental argument for a bullish oil in the second half of this year, I've bought into that thesis. We'll see if I'm right. Crude is at $73. You said it could go down to $50, then you would be buying hand over fist. As your friend, I'm hoping you're wrong and I'm right because I own some small oil stocks. What's your updated thesis here?
Well, there's a difference sometimes between oil stocks and oil the commodity, right? So right now you see oil probably trading around 74, 73, and it's got a lot of overhead resistance at 75. So for your sake, hopefully it gets above 75 and it'll start to work its way higher. But at the moment, if it gets rejected here and we start testing the May lows and you take out the May low pivot, it's going to go to 50. So, I never know what anything's going to do. I just know the technical setup. If a certain level gets breached, it can go higher and go to the next level. On the downside, if a certain support area gets breached on a closing basis, it can go to the next lower support area. So that's how I do it. And, I look at various time frames and I work out those patterns on different frames. And that's what it's told me. So, I know every time I'm always known for making some, bold call, and it takes time to get there, and he gets there and everybody, praises you. I don't look for that praise or anything like that. I just want to help people out and say, hey, this is the setup. And, I'm pretty confident though, if it gets to 50, you'll be a buyer with me. So, that's the way it's set up. And, hopefully in the short term, it goes higher than 75 and it could take that break point out and you can go a little higher. But at the moment, I know it's got a lot of resistance around the 75 level. So, if it could get through there, then you're going to be looking good. But I'm not in oil right now. And like I said, I would be in oil though at 50, and I would buy it hand over fist because that's going to be just an incredible opportunity because I think oil goes easily back to, 120, 130, even maybe 150 or new all-time highs that were made back in 2008.
So you look at gold. We talk about gold every week. And as you've referenced here with oil and some of the other things you look at, you also adjust your targets depending on how things are performing. So with gold, when we've talked, you could see a pullback to 1450. Then in subsequent months, you got a little more bullish, saying, man, maybe pull back to 1500, 1550. Where are we at, Nick? Where might gold pull back?
Now it would be 1600.
Okay.
Maybe even 1610. Anywhere in that low 1600 range, I'd have to be a buyer. That I think it was November 2022 low. I think that's what it was. I don't have the charts in front of me. But, that's where I would go now because it stayed up so long. It rallied back above 2000, obviously on the back of the financial crisis. But if you get gold back down there, 1600, and even if it goes into the 1500 handle, who cares? It's not going lower. There's a floor in gold now. Now we have, the BRICS nations starting potentially a gold-backed currency. The central bankers have been buying gold hand over fist. So, I really have a hard time now, chart-wise, just looking at the chart, seeing it go below 1600. I'm hoping it gets down there because I want to participate in that next big run because I do believe we are on the cusp of a commodity boom. And, they're all not going to take off at the same time. Some of them have, like sugar, has already made its move. That one is done. That will have a big correction. But things like silver, gold, natural gas, these copper is another one. Copper has another dip, but that's going to be an incredible opportunity. This is where you can make real big money and, money that can change your life a little bit. So, I look for these type of patterns. Back in 2020, I did that with copper. People thought I was crazy and it went bananas, right? So it'll have that same kind of run and make new highs. So people don't realize we are on the verge of a commodity boom. I think we're just in the beginning stages of it. And like I said, some things aren't going to go right away. Some things like copper still have a lot of correction to be done. Gold still has a lot of correction to be done. Silver, not so much. Silver has a little bit lower to go, but, silver is going to react first before gold. Its relative strength is there. The pattern is there. The support levels are there. So there's a lot of opportunity. Remember, Bill, when I got back into silver in September of 2022, people were laughing at me, right? When I said it's going to go down to 1750, it got there. My group, some guys made life-changing money. Some guys can retire off of what they did.
Via the options or the ETF.
We did. Yeah, we did. We made about, I think it was over 30%, 40% in swings, and we made way over 200% in options in 3 months. Those are pretty, for me, hey, some guys out there may say that's not good, but for me, those are good. That's good money.
Especially in that short amount of time. How do you balance patience with greed, especially when you're a trader, right? Because you're looking for that quick money. How do you balance that, Nick?
Well, for me, I like to the analogy I've been using since I started this company was we want to act like the lion in the jungle. Sometimes the lion goes a long time without having a big meal, but there's that time when he's just lurking and waiting in the brush for the opportunity, and then that zebra comes along or that wounded animal comes along, and him and his pride get to have a big meal. And that's what I always tell traders. I say, you have to be patient. You have to let the setup come to you. The day that you force your will on the market, you'll lose. In fact, I forced my will in a day trade on Friday. I've gone now, I can't tell you how many weeks without a losing day trade. And Friday I lost on a day trade because I forced my will. You get a little cocky, a little bit arrogant. But the truth of the matter is you let those charts come to you, you let the setup occur, and you watch and wait. And patience pays. That's the saying. And then, when you get that right setup, that's where you take advantage.
Were you on vacation Friday? So you trade on vacation?
No, I got back from vacation on Wednesday night.
Okay, because we texted and you were out of town.
Yes, I was out of town. I got back from vacation on Wednesday night.
Okay, so what are some of the other good trades you're looking at in the metals? Platinum, palladium, rhodium. Yeah, you follow any of these?
Yeah. So platinum is going to be another good one. Now you're going to want to wait for the 1860 level. Gets down to 1860. Yeah, I'm giving a rough estimate. So it could be 1865. Don't hold me to the penny on this. I'll get an email saying, "Hey, this thing went. Well, you said it was 1860, and it went at 1862." In that 1860 area, that's going to be a very good play on platinum, and that could define a major bottom for that as well. So that's a spot. Copper, I like lower. I don't have my copper numbers in front of me, but I think copper has one more significant correction to make, and then that will be, a monster buying opportunity. And you could play it with copper stocks, right? You could buy Southern Copper. You could buy Freeport-McMoRan. There are various ways of playing. They have an ETF called a COPX, COPX. It's a way of playing all the copper equities. So those are all going to be good plays, and they're setting up now. They're in the corrective mode, so they're not ready yet, but they're going to get or going to become, very, very good opportunities.
What do you see the Federal Reserve doing in the near term, next 3 months?
Well, they're in a little bit of a pickle. If that 2-year Treasury note yield gets back above the 5% level, they're going to have to start to think about raising rates. I know they talk a tough game, and then they may not do it. They'll say they're going to raise rates. They'll act hawkish. But the reality, they know if rates go up, the stock market will struggle. But, they're in a tough position. That's why I do think the Fed is going to do what they said. They're going to raise rates by a quarter point on July 26th, which is the next meeting. And then they'll probably pause again. So, they'll give everybody a little bit of a break, and then they may raise one more time before the end of the year. But the bottom line is they're not going to control inflation. Everybody thinks inflation's going down and bond yields are going lower too. That's not going to happen. Bond yields are not going to go lower. We've been in a bear market for yield for so long. Now yields are breaking out, and they're only going to go higher. Plus, you have a proxy war going on between Russia and the United States. Everybody says Russia and Ukraine, but the United States is funding this war, spending billions of dollars. It's ridiculous. And that war is inflationary, especially it's not only going on in Russia and Ukraine, it's going even on in Sudan, which people don't realize. And that's a proxy war. So, you're basically funding it, even though your troops are not fighting it. And there's no end in sight. So that's inflationary. You have all supply disruptions going on, wildfires going on in Canada. You have tons of disruptions that are constantly happening. They're not happening, in big droves like the COVID crisis where manufacturing was shut down, but they're still happening, and these are inflationary. So I think, I think inflation is going to stick around for a while, and people have to have to realize that. And traders realize that, it's just the media won't tell you that.
What's the best market to short right now?
It's a hard market to short right now in general, because the market, if you notice, bottomed out. Well, we made a higher low on March 13th, the S&P, that is, the S&P 500. And the reason for that is there's a financial crisis going on in this country because of the inverted yield curve and the wackiness in bond yields, right? The 2-year and the 10-year have been inverted for over a year now, and almost by 100 basis points. So, that's a lot of distortion. And, the banks have been absolutely creamed. We had 3 banks obviously fail. So as long as there's a financial crisis, the Fed is going to keep injecting liquidity into the system through the special discount window, through the program they've done with other central banks. So that's the reason for the rally, or we'd be at new 52-week lows right now. So it's always about liquidity. I tell my group that. Some people get it, some people don't. But, it's just about central bank liquidity. The United States central bank, which is the Federal Reserve, they can print money. And that's what they do. They print money and they throw money at the system, and the system, responds by buying equities. Where else can they put the money? So, that's what's happening right now. And as long as the financial crisis is in town, the markets go higher. But I do think we're probably going to see that end in possibly August. So I would start to be careful around August.
Are you avoiding the VIX, the volatility index?
Yeah, you have to avoid the VIX because the products around it, unless you trade the actual VIX itself, are horrible. But like I told my group, 13 was a very attractive level for the VIX. But the volatility products like VXX or VIXY, they're horrible. They're skewed and they don't really track it that well. So there were days where the VIX had a big surge and the volatility products went down. So I avoided it, but at some point I will play it if it does get extreme enough. So, but I've avoided it now for well over a year, maybe almost 2.
All right, last question. Your best and worst trades. Perhaps you've already shared your best trade over the last 30 days, but your best and worst, please.
So swing trading wise, I had 2 losers this year. That one for 8%, I think, and one for about 10%. I'm trying to even think what they are right now.
Your last worst trade was home builders, you told us.
Yes, but that was an option.
Okay.
So that was KB Homes. I took 100% loss, and that's been it. That's been my best trade, believe it or not. Recently was a Pfizer option where I made 62% in I think a day or 2. So that was a good one, and that's still my best one. I've had a few options since then that have done real well, but that's still that KB Home option was my worst. And you know what? I'm going to have probably 2 or 3 of those a year where they're going to expire worthless on me. It's just law of averages how it works out.
Nick's website is inthemoneystocks.com. Go over there to check out Nick's service. And you haven't retired yet, Nick. You've talked about it even on this show, but you're going to give it go a little further.
Well, I got to give it go a little bit further. I promised a few people I would stick around, but the fishing poles and the boating
your new fishing boat is calling you.
Yeah, that's right. So, I'm looking forward to that day. But I'll stick around a little bit longer, and I hope everybody can benefit from it. Hopefully, I'm of use to other people, and again, it's been a privilege and an honor for me to be able to help people out. So, I'm here for a little while longer, but I'm it's not far off.
All right, thanks, Nick.
Thank you, Bill.